Today is May 22nd, 2025, and Bitcoin just hit a new all-time high of $111,000 today on Bitcoin Pizza Day out of all days. And I gotta tell you, it doesn't even feel euphoric, which is weird. Usually when Bitcoin hits all-time highs, X is melting down. This time, crickets. I've been watching markets all week, and what's happening in bonds right now, especially in the US and Japan, might explain why this rally doesn't even feel like the rest. I'm JD Ramos, and if you get any value from this video, I will appreciate for you to give it a like and subscribe to the channel for more content like this. So let me break it down. I'll walk you through what's happening with government debt, what Japan has to do with all this, and why this quiet confidence around Bitcoin might be the most bullish signal we've seen in years. Trust me, if you're holding Bitcoin or even just watching the space, this one is worth understanding. So yeah, today is Bitcoin Pizza Day. If you don't know what that is, it's basically the anniversary for the first time someone used Bitcoin in the real world to buy 2 pizzas for 10,000 BTC. Back then, those 10,000 BTC were worth about $41. Today, that same 10,000 BTC is worth over $1.1 billion. And now, here we are. On the anniversary of that legendary transaction, Bitcoin breaks a new all-time high, $111,000. But what crazy is, it doesn't even feel a typical all-time high. There's no mania, no altcoin craziness. There's no people buying NFTs for millions of dollars. It feels calm, steady, almost like people are waking up to the fact that this is what Bitcoin should be doing. Okay, now here's the part most people aren't talking about. While Bitcoin is pushing all-time highs, the US bond market is under serious stress. Treasury yields are surging. The 30-year bond just crossed 5% again. And if you watched my last video, you know about the Moody's downgrading the US credit. And this new tax and spending bill, it's adding trillions to the deficit. And if you had any hope the US was going to fix the deficit like many of us did, well, now it is clear that it's printing money season and it's business as usual. Now, why should people in crypto care? Because when bond yields spike, that usually means people are selling bonds. They're losing confidence in government debt. That's not just a US thing either. Over in Japan, the world's largest holder of US treasuries, their own bond market is crumbling. Their 30-year bond just hit its highest yield since 1999, over 3.1%. It seems there is no demand. People are losing confidence that these governments are going to pay debt. It's like when you buy an altcoin and this altcoin crashes, you hope it goes back up until you lose all hope and sell it. And on the way down, a lot of people is selling that altcoin because then it becomes a game of the hot potato. Nobody wants to be the last one holding that coin. Same thing happens with these treasuries. Nobody wants to be the last one holding it because regardless of the interest they pay you, that money most likely won't be worth much because all the money governments have to print to buy their own debt, which also increases the debt to GDP ratio, and Japan's debt to GDP ratio is over 260%. Japan has been the quiet backbone of global liquidity for decades because they own US debt, European debt, and their own. But now they're looking very fragile. So what are investors doing? They're reallocating fast. They're pulling money out of bonds. They're skipping the traditional 60-40 portfolio and they're piling into Bitcoin. Not because it's sexy, but because it's safe. That's a big shift in mindset. This is exactly why Bitcoin was created for, because fiat money is a scam. Bitcoin is starting to be seen less like a trade and more like an exit from inflation, an exit from currency debasement, and an exit from countries with way too much debt and no plan to fix it. That quiet accumulation is not hype, it's conviction. So where all this go? Here's the thing. If Bitcoin breaking new all-time highs without euphoria, that means we could still be early in this rally. We're not in a blow-off top mode. We're not seeing crazy leverage. It's mostly ETF flows, institutional rotation, and a massive flight to quality. That tells me one thing. This run might not be over. If anything, it's just warming up. And if the bond markets keep melting down, if Japan starts selling off treasuries, aka printing more money and devaluating their own currency, and the US does the same thing, you better believe more capital is going to flow into Bitcoin, gold, and other hard assets. So, yeah, Bitcoin at $111,000 on Bitcoin Pizza Day isn't just poetic, it's a signal that something big is shifting in the financial system quietly. And Bitcoin is not just reacting, it's leading. Anyway, just wanted to share that with you. So, once again, I'm JD Ramos. And if you got value from this video, once again, I'll definitely appreciate if you give it a like and subscribe to the channel. In the meantime, keep your eyes on the bond market. God bless, take care, and hey, happy Bitcoin Pizza Day.